So there's this new provision in the budget for 2023 where, post 1st April 2023, if a foreign company invests in the share capital of an Indian company, you need to see what is the value of the investment per share compared to the fair market value of the Indian company. If the value of investment is either less than or equal to the fair market value, there are no adverse tax consequences. But if the investment value, the price at which the shares have been acquired, are greater than the fair market value of the Indian company, then the difference between the actual investment price and the fair market value will be treated as income in the hands of the Indian company. Now, as strange as it might sound that, a capital infusion is being treated as income, this provision was always there in the case of a resident and was intended to check the investment by way of black money. However, now this proposal is again required to be stretched to even investments from non-resident. While an investment by a third party will be subject to the fair market valuation for the purpose of Income Tax Act, the normal provision but insofar as investment by a related party is concerned, let's say in this side diagram that you see, a foreign company owns 100% of the Indian company. Now, when it invests into the shares of this Indian company, further capital, or let's say, for example, if there were two associated enterprises where the investment was less than 100% and there was additional capital which was infused, one other point that will be required to be looked at will be that is there a transfer pricing angle to this particular subscription? Until now, this amount was just disclosed as an investment because there was a decision of Vodafone earlier where this kind of an infusion did not result in any form of a taxation from a transfer pricing standpoint. But now with the introduction of this particular point, it will be interesting as to how this is also going to pan out for transfer pricing purposes. So if you are a foreign company, if you are looking at investment into the Indian company, which is a related party for you, you should consider both the valuation from a 56 perspective, which is covered in Rule 11 UA, and a transfer pricing standpoint. I hope that you like this video. If you want, you can follow us on LinkedIn or subscribe to our YouTube channel.